Hey, I'm JC with FX Insights at CIS Trading. In focus, the Great British Pound Australian Dollar with a look at the 2019 TradingView Toolkit for the TradingView.com chart package. What I'm going to do is use this video as a comparison to a prior video on the Great British Pound Australian Dollar from the previous couple of weeks. If you go to IGTV, at my Instagram, that's either Joshua Lynn Quorum or Great Gatsby JCCIS, or you can go to facebook.com/Quorum Integrated Solutions or facebook.com/Joshua Lynn Quorum, or you can also go to youtube.com/user/CIS Trading. If you'll look up that video for Great British Pound Australian Dollar trade, I had a long call on this trade, and I go over some of the pro trading levels, and you can look at all of those pro trading levels using the pro trading methodology from my pro trading seminar. And I do something quite different when it comes to technical analysis, so take a look at that video. And then when you're looking at this video, what I'm going to do is explain a little bit about how the TradingView Toolkit works and compare it to the pro trading methodology, so you can see how what it does for you is it takes a lot of that legwork from the pro trading method and it applies all of that with the pro metrics in with the TradingView Toolkit. It makes for a very easy analysis right away. So right now we're looking in focus, Great British Pound Australian Dollar. So the pound out trade, I have up right now the 4-hour chart. So I want to go over a couple of things because on this 4-hour chart there's some mixed signals. The first thing I want you to notice is when you look at the color schemes on all of the chart labels to the right, all of the darker colors, if it's a darker green, darker blue, those darker colors represent your longer term trend conditions. So when we look at the average trend strength at the bottom on ProMetrics, that's telling us that the average trend strength right now is 22.6 pips, so 22.6 pips upward is the pressure of trend strength on that Great British Pound Australian Dollar. And that's just on the 4-hour candle. When you look at the Pro Trader overlay on the main chart, do you see how all the darker levels, your target high, your Pro Trader momentum level, and your target low, those are all still showing a bullish longer term intermediate trend, even though the immediate sell signals that we see on our candles with our Great Gatsby Pro Trader candlesticks on our chart overlay signals are still bearish in the short-term trend, so the immediate condition is bearish. The same thing when you look at the pro action market depth at the top. When you look at the signals there, you have a darker green max depth, darker green minimum depth. Those levels are showing that the intermediate trend is still bullish, but our immediate short-term trend, our current conditions are bearish. So when we're looking at the TradingView Toolkit, that's one of the first things that we can see is sort of a dominance of what the current conditions are. So we're in sort of a consolidation between short-term bearish trend, intermediate term bullish trend. When we look at pro action market depth at the top, our delta trend's only at about 10. All right, and our minimum is at its lowest, and typically what that means is that the market really needs to move. Our average market depth is around 32, so we're looking at market depth at least getting up above 18 to the 32 pip range from high to low. So we're looking to see a market at least move from the 10 pips it's already moved in the range, either 22 pips lower potentially, or 22 pips higher, but at least 8 pips one way or the other or both. So we're looking for either 4 to the high and 4 to the low, or 8 above the high or 8 above the low. So we're looking for at least 8 more pips in this range on this 4-hour. And that helps when you go to your short-term time frames, because you can look at your conditions and say, I know there's 8 pips before we get to a minimum depth on this trade. So there's something in there for me to get at least 8 pips. Now, when you look at the main overlay on the chart with the TradingView toolkit, each of these levels does something to automatically adjust so that the pro trading methodology is always working for you, and you don't always have to keep up with those key levels traditionally doing the analysis on the chart as I outlined in the pro trading seminar. For example, if you look at the target low here at 188.73, the target low at 188.73 is right at the doji. If you look at the doji at the bottom of this last uptrend that we had, the last up move, that's a market making candle, and that level is right there at that level. So what the pro trader does is it outlines those key pro trading levels for you on your main chart, plus you get your immediate candlestick signal with the Great Gatsby Pro Trader candlestick signal and your short-term, intermediate-term trend conditions. Now, when we look at the pro metrics, I'm going to go from this 4-hour and I'm going to go over and I'm going to take a look at the weekly chart just to kind of give you an idea as to what we're looking at on a weekly perspective and what it looks like as far as the TradingView toolkit. So when you look at the TradingView toolkit on this weekly, we're bullish. We have a delta trend, which is our immediate price action, is at about 400 pips, 399.7, and we're trading above the average market depth, which is at about 317. So we are about 73 pips higher than the average market depth in our total candle range. The minimum depth's about 186. Now this is important when you look at a weekly candle pound out trade. That 186 is sort of a risk of what you're looking like minimally on a market move. So if the market, let's say you get in a trade and the market starts to move, you're looking at any time the market can move about 186 pips on you right away with the pound out trade. And when you look at it on a weekly, it tells you that. So looking at that market depth, we can see that all the conditions are still bullish on the weekly, and that's obvious with a all for one bullish candle on our chart. When you look at the pro trader, when you look at this, you can see not only what the signal conditions are, not only what your candlestick signals are, but you have the buy sell overlay condition, but then you also have your key pro trader levels are automatically provided for you. You know where your highest potential target high reach is at 194.31, which seems a long shot from where we are right here at 189.38 and a half. And then our target high, our main high target is the 190.94 level. And we've already hit that once and come off, and now we've bounced back up toward that, but we haven't quite got up that far. Our support is the pro trader momentum metric, and you can see that there's a very thin line in there. There's a very thin line in there at 188.61. That 188.61 is our pro trader level within that candle. So it's telling us from 189.38, we're a good distance, about 70 pips, plus pips, all the way down to that 188.61. Then you have the momentum, the GG average, which is the momentum at 185.85. Now, when this week closes, those levels are going to move higher with the obvious bullish move in the market. But what you have is an outline of where all your key levels are. Once again, if you look at the bottom where you have the GG target low at 177.39.6, that is right in the market making area of a bottom tail. You can see a bottom tail doji, or what looks kind of like a high pin with a long blue tail that comes down at the very bottom of this last move higher. That 77.39 is sort of right in the middle of that market making region of that candle. So what the pro trader does for you is it automatically provides for you the pro trading levels that we use in the pro trading methodology, but it does that on an algorithmic basis, adjusting real time candle by candle for you. When you look at the pro metrics at the bottom, you can see that the current trend is clearly bullish all the way across, but what these metrics are giving you are the exact point pip calculation that the expected strength move is on the basis of each technical metric. So when you're looking at momentum says 428. But when we go up and we look at our market depth, we've gone up to 399. So our market depth was 399 and our momentum was 428 for this week. So what we can see is we came in a little bit less at 399.7 than what the momentum metric shows us. When we look at the price action, says 328, and we moved higher beyond that range to 399. And what that means is it's telling us that our price action shows about 328 pips higher, and our delta trend on a strong bullish candle for this week was all the way up to 399. So we actually traded higher in range than what the price action is, right between momentum and price action, and that shows a healthy bullish move when you're trading between momentum and price action, because that gives you room to go up and a little bit to come back without triggering a reversal, a trend reversal. Our hot bar compression is about 312, and what that means is we really needed to get above 312 pips to the upside to stay bullish, and we did. And that's what these metrics tell you. So when you look at trend strength, it's telling you where your trend support is. When you're looking at the average trend strength, it's giving you a range between your trend strength and your average trend strength from 261 pips up and 286 pips up, where there could be some consolidation in there. So what these metrics are actually providing are some of the exact measurements for your trade. So if we take a look at what it looks like on a daily chart, on the daily chart, we've come up to the high, hit the high target, and we've come off just in the last day. If you look at the top at the Pro Action market depth, you can see that our current delta is really low for this day at 69. Our average market depth is up around 121, and we're at about 70 pips for the day. So we traded below average right down at the minimum market depth. Our max daily market depth moved up this week to a 235, up from about a 190. So it's showing that there is some increasing in the potential max market depth over the next week or 2 weeks. When you take a look at your pro metrics at the bottom, you can see that all of those metrics, the momentum metric for the day shows 183 pips to the upside, and we had really hardly any up move today. And what that means is that's an indication that your next day is going to be a little bit negative. And one thing that the Pro Trading Seminar does for you is tell you how to sort of interpret these inside bars and look at the pro trading levels and your metrics to see exactly how it works. One thing about the Pro Metrics indicator is it's going to tell you a whole lot of things. If you go over the TradingView Toolkit introductory video, there are 6 major signals that you're going to receive from the Pro Metrics. There are multiple different reversal signals in there that are really easy. We don't really have a price action reversal or a momentum reversal that would be in play if the market was to move down from here on a daily perspective. So if it does move down, we're looking for an opportunity to get back in and move back a little bit higher. We don't really have a solid real reversal. That doesn't mean we can't kind of trickle down slowly without a reversal. We can, but what we're looking for, if we don't have a momentum reversal or a price action reversal, then the only reason for a real reversal is just sort of a consolidation back to trend and then back up with the trend. So that's what we're looking at when we're looking at our Pro Metrics, is we can see the exact pip move with momentum at 182 for the day, and we didn't hardly have anything. And that gives us an expectation that the next day when the market opens for the next day, our metrics are going to show us sort of exactly what those potential moves initially should be, and they're going to be far less. So we're going to get a momentum reversal and a price action reversal to the downside if we were to close here today, but that won't show on our metrics as an actual reversal, even though it'll show us a bearish signal for that day, because we don't have the 3-bar condition or the 2-step condition that's outlined with the Prometrics. So take a look at that introductory video for the TradingView toolkit so you can see what those signals actually are. When you look at trend strength, you can look at trend strength on a couple of bases. The first is the average trend strength, which is at 92. And again, we didn't have any up move toward that to maintain a trend at 92 pips to the upside. And the core trend strength is at 51. And with a small consolidation down day with low delta, we hardly broke 51 pips at 70 pips in market depth. So, but we can see all those conditions are bullish, and that for today we traded below all of those conditions, and that's a sign that the next day we're going to see some kind of reversal to the downside. But once again, when you look at the Prometrics, you don't have a 3-bar reversal or a 2-step scalp method in play. You don't have a momentum reversal, a price performance reversal, or a price action reversal. So the only signal we would really have would be a 1-day Great Gatsby Pro Trader candlestick reversal to the downside that might give us an opportunity to re-enter long off some of our support down around some of our key levels on the daily and the 4-hour. Take one more look at the 4-hour chart. When you take a look at the 4-hour chart, you can see that we've come off from a high. We don't have any divergence on this 4-hour. Now, divergence is different with the Prometrics. You can't always look like you do at a MACD, because even though it works that way over time, it really doesn't. The divergence for the Prometrics is real time. It's a 2-step divergence method. It's either a higher high with a lower metric or a higher close with a lower metric, candle by candle. Even though, like when we look at a daily chart, you can see that there's divergence like a MACD or an RSI or a stochastic, but it doesn't work quite like that, because that's not what we're trading. We're not trading like a MACD, a moving average, convergence, divergence, and that's not how the metrics are measured. It's candle by candle relative to the most recent conditions. So when you look at this divergence, you have to be very careful to judge like you do a MACD, because that divergence really is not the way that divergence works with metrics. If you watch the video, I go over the 2-step scalp method with a higher close, lower metric divergence, or a higher high with a lower metric divergence. And that's a candle by candle method rather than what we see here. Now, even though these metrics on this daily do show some divergence, we discount it initially, and then when we get a signal, we can look. If we have a sell signal, we can look if we were to move to a higher high and these metrics were lower with this kind of divergence, which would be the conditions. If we were to make a higher high than our previous swing high today, we would be in a condition where we have divergence, and we would know that right away. As soon as we had our actual sell conditions on our metrics or our candlesticks, then we would know that that divergence is going to play out. Does that make sense? So you can't do it the same way as you do traditional divergence with some of your other oscillators, because metrics calculates a candle by candle method. So when we look at this 4-hour, you can see that we've consolidated mostly through this day, very tight low range, and we should see the market depth pick up on the next trading session. So the Sunday, Monday session, we should get a little more range in. Based on the signals, we're looking for a little bit of a dip down, but not much. You can see where our trend supports are for the 4-hour, and you can go into this as short as you want to, all the way to your 1 hour, and it's going to give you all of your metrics. You can go all the way down. I can take a look at the 1 minute, and I can see exactly where I am. I have hot bar compression, which shows a long signal. I don't have a buy signal on my Great Gatsby Pro Trader yet. We would have to see a break of that core, but I do have a Great Gatsby diamond pattern on this bottom on the 1 minute, and that might mean we should see a move a little bit higher above this bullish green candle. And you can see that as price starts to move down, it breaks that hot bar compression. And that's what that hot bar compression tells you, is we need to see a move lower. This would be an opportunity anywhere after it makes this move down to look, see how we have a lower low, but a higher metric, candle by candle. That's an opportunity to trade that divergence with a diamond pattern back up above hot bar compression, which gives us, right now it's only about a pip, but you can see right away, if you were to get in that trade, like I said, we're back above hot bar compression with a Gatsby signal. We don't have a 3-bar reversal yet, but if it moves just a little bit higher, you can see the pro metrics at the bottom will show us a 3-bar reversal where the third bar is higher than the first bar, where the second bar peak low is the center. So there you go. You could see what we saw there was a diamond pattern on that 1 minute trading above that high bullish candle, and then it dipped down below. We had divergence after hot bar compression. We were above our low target. We could get in that trade right away at close, or any time really, and trade that 1 candle divergence back up, and that was a couple pip trade. So that was a way to make a couple pips very quickly on that 1 minute. You can see where our market depth came in on that, just right at about 2 pips on the market depth at the top. So we're looking for a move above this candle where we have the bullish candle with a diamond pattern right there, and we should see that come right up in, and you can see how it comes right into our key pro trader and GG average levels, our GG pro trader and GG average levels, and it kind of hits those levels, and then we either see a breakout up to the high target or it'll consolidate back. So you can see how those metrics work. You can make these trades very quickly on a 1 minute chart and make small amounts within the market depth range, and position yourself. If we go to the 5 minute, so we're looking for a move back above that diamond, you can see what we just did. Just walking through that trade was enter in right at the very bottom just about on that trade, and caught this 5 minute candle coming up, and now we have a buy signal condition with hot bar compression, some bullish conditions on our pro metrics. Our market depth still kind of low, toward the low end on our pro action, so we should see a move higher here on our 5 minute. We can go right back to our 1 minute very simply, and we can see we're looking for a move up to our target high. We're right at our GG trend and our GG pro trader and GG average levels, all right there on, and you can see how price kind of moves around. That pro trader level is a key level for our pro trading methodology. It's a within candle level, so it's always within our candle, and there we go. We're going right up to that high. We can take a look at the 5 minute once again, and we can see where our next target is on that 5 minute is up to 137. So when you go all the way back to that trade and you look at what we were looking at there, was we were looking at a position where we got in right around the 133 area, and we're up to 135.5. We're on a 5 minute chart, and we're looking for a move all the way up to 137. So that's 4 pips. If you're trading a full lot, that's $40. Our market depth on this 5 minutes still down, so we should see that market depth at least move up above the previous minimum depth. So we're looking for at least about a 2 pip move on this 5 minute higher. So we still have about 2 more pips left in that trade. So this gives you an idea when you're looking at these metrics and looking at the TradingView toolkit, how they actually work to help you not only position yourself, but manage your position through your time frames, set up your trades each day, and know where all of your levels are, what the expected conditions are before they ever even happen. So you kind of get a predicting view of what the market conditions are and what the market has to do to perform, and how far the market potentially will perform before you ever even begin trading. So I'm JC with FX Insights with a quick overview looking at the pound out trade and the TradingView toolkit for TradingView.com. Make sure to go to youtube.com/user/CIS trading. Watch the introductory video for the pro trading and the TradingView toolkit. Watch both of those videos. They're each about an hour long. And go to cisevents.wordpress.com or thinkorswimtoolkit.wordpress.com and check out all of the information there over what we've done at CIS Trading, what I've produced as far as indicators, and you can take a look at the pro trading seminar information and the TradingView toolkit overview to kind of see what's available, what's included. So before this weekend begins, I'm JC. I want you to have a great weekend. Take a look at this pound out trade. Go over the previous video from the last week's trade. Look at this trade. And make sure to look at that TradingView toolkit video. It is available for in-person individual license purchase for $365. I have offered the entire indicator package, all three indicators, to TradingView for purchase. And I have not yet received a response on it, but I have offered it to them for $1 million to purchase all three for all of their clients. So if you have any questions whatsoever, feel free to contact me through any of my social media or my email that's available on my website or YouTube. And have a great weekend.